Many Kenyans hoping to see a reduction in interest rates charged on bank loans will continue being an unhappy lot if the latest trend in the banking sector is anything to go by. Many are since expecting the regulator to act, with the banker's reference rate so far failing to control the rising interest rates. It seems what has been left for the CBK is to urge the banks to consider lowering interest rates. The question, however, is will the banks heed to this advice?
Largely, a lot of customers have had challenges from the huge interest rates that the banks charge, and that has caused their inability to service those loans. We are encouraging banks to reduce their interest rates, but also we have tried to empower the consumers by publishing the log of who charges what, so that the customers are able to know where to go for cheaper loans.
With the 2015 financial reports from all the banks in the country showing an increase in non-performing loans, Nyaoga says that claims by banks that stiffer rules from the CBK are to blame for the increased NPLs are baseless, noting that it is the gradual implementation of strict requirements on financial reporting that is exposing the bad loans.
The regulations have been there. We have not come up with new regulations. All that we are doing is to enforce, to implement the regulations that have been in the books. And we are now encouraging stricter compliance in financial reporting. And that's why the banks now are reporting their NPLs, non-performing loans.
And with the banking sector in the recent past experiencing turbulence following challenges at the Imperial and Dubai Bank that were closed late last year, Nyaoga says that CBK has put in place strict guidelines for bank auditors on financial reporting, and that the boards of commercial banks should also act and not leave the supervisory role to the CBK alone.
In the area of financial reporting, the auditors of banks have now been put on strict compliance guidelines so that they give us proper financial reports. If the oversight of these institutions from the boards is wanting, then the banks will face challenges and the consumers will face challenges.
He was speaking during the rebranding of KREP Bank, which will now be called the CDN Bank.
It's not just a name change, it's actually marking a change in the whole orientation of the institution. Core capital is not one of the challenges we are facing. In fact, from a capital to asset ratio, we are perhaps one of the best capitalized banks. I've repeated before to the management of the bank that as shareholders we are committed, ready and willing to provide as much capital as is necessary. The constraint is really around the offering the best service and the best solutions to our customers.